What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is July 8th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about the topic of the hour, and is no other than the news that has recently come out of Deutsche Bank. Now, I don't have to be the one to tell you, you probably know that Deutsche Bank is not only one of the largest banks in Germany, but along with that is one of the largest banks in the Eurozone, making it a huge global player in regards to understanding the state of the global economy. So we're not only going to be talking about what this means, not trying to oversell it or undersell it, trying to get a non-biased, realistic view of what role this is going to play in the sense of the financial sector, but also what this means ultimately for cryptocurrencies and the broader economy. So we've got lots of things to discuss, guys. I hope you all will stick around for it. We've got lots of things to talk about right after our quick sponsor. Alrighty, everyone, so let's go ahead and start off by trying to understand why Deutsche Bank yet again is in the headlines, and as many of us know, it has a reputation for this and usually not for good things. Well, to simplify what's going on at Deutsche Bank at the moment, Deutsche Bank really has two major announcements, and I have to be fair, most mainstream media outlets are doing a decent job of really talking about what they announced, and that is that two things that they're announcing are that they're cutting out of their global equities division, basically cutting out any trading, investing, or speculative kind of services that they offer, as well as building any positions themselves as a bank, and then also slashing over 18,000 people from their workforce. And I think this is pretty significant, guys. I mean, it's not only telling that they're getting out of this division, we'll talk a little bit about why that's important later on, but also the fact that they're cutting 18,000 jobs. And as we mentioned, they've had a reputation for being in the headlines because just last year in 2018, they already announced that they're going to be laying off 7,000 people. And that was quite significant as is. But the fact that they're adding an additional 11,000 to their projections definitely throws off a lot of us, especially even those, for example, who, might have been bearish on the company. So again, very interesting to take this into account. And again, these key points really summarize it well, guys. I don't want to get into the basket of a lot of the drama and kind of the things that the mainstream media are going to blow up. But basically, they're bringing their headcount to around 74,000 by 2022, being one of the largest banks in Germany. That's pretty significant. And they're hoping in their restructuring plan to reduce costs by 7.4 billion euros by the end of 2022. And this is, again, really telling in the key term here is restructuring, right? They're doing a restructuring of their company. This is something that I've known about for Deutsche Bank for some time from people I know who, for example, have had experience researching deeply into Deutsche Bank and its business practices, as well as people I know who work in the financial sector. The rumor has been going around that their whole objective is to restructure as a company, to go from an equities company into a company focused on lending, as banks traditionally did. So, this is something that they aim to bring in more profitability. As we all know, lending is a very profitable business. So we can see here again, this is not the first time in the past. However, I think it has played a role in shaking up markets a little bit. We can see that, again, not only a variety of news sources are covering it, but we can see here that on Yahoo and the pre-market that Deutsche Bank is almost down around 4%. So closing down on some of the gains that it's had over the last few days and possibly retesting towards the lows over the next few days. Now, Deutsche Bank has been a failing company for some time. I don't think this is any shocker. And I hate to build this analogy, and this is like a terrible analogy, but I think in the world of finance, you just got to be cold cut and to the point sometimes. The collapse of Deutsche Bank, or the possible, kind of reduction in its scale as a company, has kind of been predictable. And the analogy I think of is it's kind of like a family member who has been growing old for a long time, has not been getting well for multiple years, finally passes away, and it's not much of a surprise versus someone who just in an instant is taken from your life. I think that's the case of Deutsche Bank here, except I don't consider Deutsche Bank a family member. Deutsche Bank has been one of the easy kind of companies we could point to as financial I would say financial contrarians. We've been able to kind of point and say, hey, look, Deutsche Bank is the weak link here, and it's going to be one of the first dominoes to fall if the global economy goes into a recession. But the fact of the matter is that it's actually lasted a lot longer than I think most of us anticipated, even those who were just simply looking at the stock price. And I think most people had expected that this would decline, or it would absolutely collapse and possibly collapse the Eurozone due to the fact of its balance sheet in regards to its exposure in derivatives. Now, I want to spend some time to dispel this myth, because this is not why I'm worried about Deutsche Bank as a company. Deutsche Bank as a company has a massive derivatives exposure, and a lot of people point towards it because of its very large figure, and that is the supposed 40 trillion. That's right, it's not 40 million or billion, guys. $40 trillion of estimated derivatives that it has on the books. So why is this not significant? Why is this not as big as it's put out to be? Well, $40 trillion of derivatives can balloon quite quickly off of very small amounts of actual trades going on. So what do I mean by this? So as you all probably know, in regards to derivatives, in 2008, derivatives played a big role in the financial crash, and it played a big role through basically collateralized debt obligations and basically betting on top of these different types of financial assets. Basically, I think one of the best analogies that are very simple to make was, if you guys ever watched The Big Short, they showed how basically people were making bets on the market, and then people made bets on top of those bets, and it turned what was originally just a few $billion of assets into a multi-trillion-dollar gambling market, in a sense, basically making bets. And that's exactly what's happened here with Deutsche Bank. Basically, we've been able to balloon the $40 trillion valuation off of a few select underlying financial products. And they show it through an example here. This is just an example. I'll leave the article link down below for you guys. But the writer, who's kind of dispelling the myth, shows how you can easily balloon a billion-dollar position into billions of dollars on top through providing long and short positions for both sides. And you can actually neutralize the risk as a bank and basically cover any potential losses by just basically hedging with the equal position on both sides. Again, continuing to balloon the overall amounts of positions that are on the open market. So that's how you can get to a $40 trillion figure. Now, the bad news here, and the thing I'm worried about, is what are those underlying assets? Even if it's just an estimated $100 billion in assets, that's enough to tear down an economy. That's enough to dry Deutsche Bank clean and be in absolute need of a bailout if things go wrong. What kind of exposure do they have in those $100 billion of assets? And the reason I'm concerned about that is because I take a look back at history, and I understand that Merrill Lynch, with the CDOs that it had exposure to, that brought it to its knees as one of the first weaklings in the financial economy that needed financial support or acquisition. Well, it was Merrill Lynch, and it had to do with its exposure to CDOs. You can see down here, a month before, they had an additional group build on to Merrill Lynch, and this was back during, I think, 2006. A month before the group was created, Merrill Lynch owned $7.2 billion of the seemingly safe investments, the CDOs, according to an internal risk management report. By the time the CDO losses started mounting in July of 2007, that figure had skyrocketed to $32.2 billion, most of which was held by the new group. So we can see that even a few banks here with just a few $1 billion of high risk exposure can lead towards a domino effect. It can lead towards severe, financial risk for the broader economy. And this is coming at a time as well, and I think this is why it's been reflected and kind of waning on the price here for Deutsche Bank, even as it started to enter into profitability. This is coming at a time where it's already got enough on its, plate to deal with, and that is the recent scandal with Danske Bank, basically the bank in Estonia that's been laundering hundreds of billions of dollars of pretty much money out of Russia. Right? It's been, kind of basically circulating rubles out of the bank for some time, and it was over 200 billion euros, or basically $180 billion in pounds. So this is really substantial stuff, guys. And again, I might add, by the way, Deutsche Bank played a big role in this as well. Sorry, just to build on that. Danske Bank is a separate bank, but they played a role in it. And, again, the only positive thing I can see for Deutsche Bank is that over time, we're taking it from older timeframes here, from 2015 to 2018, they have finally entered into profitability. But for a bank to be only making $267 million with the kind of scale that it has in Germany, and with all these problems hitting, not to mention that this is going to turn, they're expecting a €2 billion loss this year, that is really concerning. And it doesn't seem to me like Deutsche Bank is having an easy outing of turning from an unprofitable to a profitable company. That's my bigger concern. If that's the case, the German government or the European Central Bank is going to have to step in. They're going to have to intervene. And quite frankly, I think that's going to show just how weak the economy is. When you live in an economy where your entire central bank, that services multiple economies, by the way, mind you, has had interest rates at near zero, actually negative in some cases, for the last decade. They've been pumping in capital, buying up the toxic assets that you generated over a decade ago, and you still can't come to profitability by charging people predatory interest rates, by selling off financial products and services. You guys know crypto exchanges as well as traditional exchanges are where the money is at. That's where people make a ton of money, and they can't even make a profit on this. Are you kidding me? That's what concerns me. Sorry to rant and rave, but you guys know eventually, I was being kind of soft on Deutsche Bank throughout this. I wanted to, be non-biased, but my critical side comes in on just how idiotic it is that this company can't maintain profitability. It tells me that there's a belly, basically there's a I guess it's the belly of the beast. There's something inside that we don't know about that has been looming for a very long time, and it obviously must be very clear at Deutsche Bank. There must be something that people don't know about on the broader scale, but a very select few know about. And it could be their derivatives exposure. Who knows about this? It could be that even though the $40 trillion figure is a little bit overhyped, that the underlying exposure is risky. We don't know what they're holding. They're not very transparent about it. And it's hard to find the actual details and financials on it. So when I see all this, guys, the fact of the matter is that we know Deutsche Bank is one of the weak links. We know that it is going to be one of the first dominoes to fall or need financial support from the German government or the European Central Bank. And the fact of the matter is that all of this kind of news, to me, going into the key topic here, is that it feeds into the need for cryptocurrencies. I know people, for example, think that, Bitcoin obviously doesn't make a good currency or doesn't do this, that. I'm not even trying to make that argument here. I'm trying to make the argument that Bitcoin is going to become extremely relevant as a hedge over the next few years, even if the German government or European Central Bank steps in, even if more banks collapse and more governments and banks can step in. They can only do so much. And I think Deutsche Bank's an absolute proof of that. They've used every single monetary tool they have, and they can't keep Deutsche Bank up. It concerns me. Maybe by the next few years, they can restructure themselves into becoming a lending branch. But I think it's a little too late because we're getting towards the end of credit cycle. People aren't going to be taking out loans. Interest rates are, again, if you can't get people to take out loans, it's just, I don't know, guys. I'm a little fizzled here. The fact of the matter is that Deutsche Bank is a very severe risk. But the thing is, the risks that are tied to the company we're not really aware of. We can't get a very clear picture on. But I can tell you one thing. There is one hedge out there that will, stand against the test of time, even if Deutsche Bank does fail. And that's Bitcoin. It's cryptocurrencies. I think stories like this are going to compound. This isn't unlike 2008. This is not going to be a sudden 1 month or 2 months of events. This isn't going to be something that becomes extremely apparent in a very short period of time. It is going to be a slow but steady grind towards the lows, and things will get more and more exponential in nature as time progresses. But this is one of the first weak links that we have in the economy, guys. Take note of it and understand that, in the case of Bitcoin and other types of assets like gold and silver, we've got a ways to go in this cycle. So if you guys are here, you guys are paying attention and listening in to what's going on in the broader economy, I feel it's going to not only pay off for you guys, but I'm proud of you, and I know that you're in the right place. So anyways, guys, thank you all so much for watching. I'd like to know what you all think about this. Maybe you guys could apply a different opinion for me. Maybe you're a little more hawkish and kind of critical of Deutsche Bank. Maybe you guys think that I'm just spreading FUD. I'd like to know what you all think down below in the comments. I've talked enough today. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.